Hi, welcome to the Capital Region Skinny from the Greater Capital Association of Realtors, where we dig into the most recent numbers from our market. Let's jump right in. When comparing year-over-year performance for a particular month, it's important to take note of all factors affecting the market during both the current period and the previous year. Be sure to check the rearview mirror and note that activity was uniquely strong last year at this time due to the approaching deadline for the 2009 tax credit. This means that we've entered an apples to oranges comparison period, which may make this year's activity look especially slow for the next few months. Combine that with the fact that this time of year typically endures slowed sales activity, and that buyers in 2010 were driven to enter contracts by April 30th, and you'll see that September 2010's numbers should be taken with a grain of proverbial salt. Pending sales posted a 27.7% decrease from September 2009 to arrive at 579 contracts written. If you dig into this a bit, you'll quickly see that the artificially low sales activity in September 2010 was a result of the greater than usual purchase activity in September 2009. After taking this into account, a roughly 13% decrease is more realistic and likely would have been the case without the first tax credit. As a result, inventory levels increased by 5.7% as active listings grew to 8,655 units. Continue to monitor this important metric as it does a great job of measuring the balance between buyer and seller activity, and therefore price movement. Speaking of prices, they were surprisingly resilient given the circumstances, and even gained significant ground. The September median sales price of $201,265 was a tremendous 8.8% increase over last year at this time. For those buying or selling, and that kind of accounts for a lot of folks in the industry, it's important to keep an eye on negotiations. The percent of original list price received at sale has been slowly sliding downhill, back towards buyers, that is. The current 92.1% was a 0.9% decrease from last year at this time. For the fourth September in a row, negotiations have been increasingly moving toward a buyer's market. With their hands locked at 10 and 2, buyers are firmly in control here. Low interest rates, plenty of homes to choose from, and promising negotiations create an even more favorable buying environment. Continue to watch new job growth levels as well as the local unemployment rate. As this sluggish recovery crawls onward, the passage of time and a slowly but surely healing economy will further restore consumer confidence and buyer activity in the marketplace. That's the Capital Region Skinny for this month. Tune in next month for the latest.